Have you ever thought that investing is only for wealthy people? What if I told you that you can start building your financial future with just $100? It may sound like a small amount, but every successful investor started with a first step. Today, I'll show you exactly how beginners can start investing with just $100, avoid common mistakes, and build wealth over time. Imagine checking your phone and seeing $100 sitting in your account. Most people would spend it on shopping, fast food, or entertainment. But smart investors see something different. They see an opportunity. That $100 could become the beginning of a lifetime of financial growth. One of the biggest investing mistakes people make is waiting for the perfect time. They tell themselves they'll start after getting a better job, earning more money, or saving thousands of dollars. The truth is, the best time to start investing is when you have money available, even if it's only $100. Now, let's understand the difference between saving and investing. Saving money helps protect your cash for short-term needs, but investing gives your money the opportunity to grow. While no investment is guaranteed, history has shown that long-term investing has helped many people build wealth over time. Before investing your first dollar, you should understand a few basic investment choices. The first is individual stocks. Buying a stock means owning a small piece of a company. If that company grows successfully over the years, your investment may also increase in value. Another beginner-friendly option is an ETF, or exchange-traded fund. Instead of investing in just one company, an ETF allows you to invest in many companies with a single purchase. This helps spread risk and makes investing much easier for beginners. You may also hear about index funds. These are popular among long-term investors because they follow the performance of a large group of companies rather than trying to pick individual winners. Many experienced investors prefer index funds because they are simple, diversified, and designed for long-term growth. Once you understand these basics, your next step is opening an investment account with a trusted brokerage platform. Today, many investing apps make it easy to get started, even if you only have $100. The process is usually simple and can often be completed in just a few minutes. After your account is ready, you can invest your first $100. Don't worry about becoming rich overnight. Successful investing isn't about making quick money. It's about building a habit of investing consistently and allowing time to work in your favor. Finally, remember one of the most powerful ideas in personal finance: consistency. Imagine investing a small amount month after month while giving your money years to grow. Over time, those small investments can become much more valuable through patience, discipline, and long-term thinking. In the next part, we'll look at how to choose smart investments, avoid beginner mistakes, and create a simple strategy that can help you build wealth starting with just $100. Now that you've made the decision to invest your first $100, the next step is creating a simple investment plan. Every successful investor starts with a clear goal. Ask yourself why you're investing. Are you building wealth for retirement, saving for a future home, creating financial freedom, or simply learning how investing works? Having a clear purpose makes it easier to stay focused when the market changes. Next, think about your risk tolerance. Every investment carries some level of risk, and prices can move up and down over time. The important thing is choosing investments that match your comfort level instead of chasing the highest possible returns. Smart investing is about making informed decisions, not taking unnecessary risks. As a beginner, it's usually better to keep things simple. Rather than trying to find the next big winning stock, many new investors choose diversified investments like ETFs or index funds. These investments spread your money across many companies, helping reduce the impact if one company performs poorly. Diversification is one of the most important principles in long-term investing. Now let's talk about one of the greatest wealth-building tools in history: compound growth. Compound growth means your investment earns returns, and those returns begin earning returns of their own. Over time, this creates a snowball effect. The earlier you start investing, the more time compound growth has to work in your favor. Another important lesson is controlling your emotions. Financial markets naturally move up and down. Some days, your investments may increase, while other days, they may decline. Successful investors don't panic every time the market falls. Instead, they stay focused on their long-term goals and avoid making emotional decisions based on short-term headlines. One of the easiest ways to build consistency is by setting up automatic investing. Imagine adding a small amount every month, whether it's $25, $50, or $100. Automatic investing removes emotion from the process and helps you build wealth without constantly thinking about when to invest. Remember that investing is also about education. Continue learning about personal finance, stock markets, ETFs, index funds, diversification, and long-term investing. Every new lesson helps you become a more confident investor and reduces the chances of making costly mistakes. Let's look at a few common mistakes beginners should avoid. First, don't chase stocks simply because everyone else is talking about them. Second, don't panic and sell during temporary market declines. Third, avoid putting all of your money into a single investment. These mistakes have cost many investors money over the years. Instead, focus on building a balanced portfolio. Diversification means owning different investments instead of relying on just one. This approach helps reduce overall risk while giving your portfolio more opportunities to grow over time. Finally, remember that investing is a marathon, not a sprint. Real wealth is rarely built overnight. It comes from making smart decisions, staying patient during market ups and downs, and continuing to invest consistently over many years. Your first $100 is simply the beginning of a much larger financial journey. In the final part of this video, we'll explore how to stay committed, think like successful long-term investors, and build lasting financial freedom, starting with small, consistent investments. Congratulations! You've learned that you don't need thousands of dollars to begin investing. But starting is only the first step. The real secret to building wealth is staying consistent and thinking long-term. After making your first investment, avoid checking your portfolio every single day. The stock market naturally moves up and down, and short-term price changes are completely normal. Successful investors focus on where their investments could be years from now, not what happens in a single day or week. One of the most powerful habits you can develop is investing regularly. Even if you can only invest a small amount each month, consistency matters more than trying to perfectly time the market. Small investments made consistently can grow into something much larger over the years. There will be times when the market declines. News headlines may sound negative, and prices may temporarily fall. This is where patience becomes your greatest advantage. Instead of reacting emotionally, experienced investors stay focused on their long-term plan. Market downturns have happened throughout history, but long-term investing has rewarded disciplined investors who stayed committed. As your knowledge grows, you can begin exploring additional investment opportunities. You may learn about retirement accounts, dividend-paying investments, or other long-term strategies that align with your financial goals. Keep learning, keep asking questions, and continue improving your financial knowledge. Think about this simple comparison. $100 spent on something you won't remember next month is gone forever. The same $100 invested wisely has the potential to grow for years. Every dollar you invest today is working toward building your future instead of disappearing after a single purchase. The goal isn't to become rich overnight. The goal is to build habits that create wealth over time. Financial freedom isn't usually the result of one lucky investment. It's the result of hundreds of smart decisions made consistently over many years. Before we finish, remember these 4 simple rules. Start small. Keep learning. Invest consistently. Think long-term. If you follow these principles, you'll already be ahead of many people who never begin their investing journey. Remember, every experienced investor was once a beginner. The difference is that they decided to take the first step. Your first $100 isn't just money, it's the foundation of a new financial mindset. Every investment teaches you something valuable, every contribution builds confidence, and every year brings you closer to your financial goals. Thank you for watching this video. If you found it helpful, be sure to like this video, subscribe to the channel, and turn on notifications so you never miss our latest personal finance and investing guides. Share this video with someone who's been waiting for the perfect time to start investing. Sometimes all it takes is $100 and one smart decision to begin changing your financial future. We'll see you in the next video. Until then, keep learning, keep investing, and keep building your path toward financial freedom.